Upside for wheat since 2012 and yet a rebound in soybeans. The one to win is Jerry Gidel on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. If you're new here, please make sure you subscribe. So, Jerry, how are you today? We are seeing a very strong rebound after the export sales data was released.
Yes. The soybean sales last Thursday um, were 105 million bushels. That's the biggest number we've had in quite some time. From there, we had some enthusiasm early in the season and that, but the Chinese have started to pick back up in here and be involved, and they've been buying beans here both uh, to ship off the Pacific Northwest and off the Gulf. I think they kind of held back a little bit because of our issues here in the U.S. with our impact of Hurricane Ida and that, but now they're having to pick things up, and they want to get some of these soybeans closer to home here, uh, behind of the winter weather and things like that. And so that's been a positive here. Initially, here after the report, we had a little buy the rumor, sell the fact, but once people started looking at what was going on there, we've kind of firmed back up early this week from there. So, and also the ongoing strength of the world wheat markets have really been a big factor too.
Yes, we are seeing less production in some key wheat production countries.
Yes, well, the U.S. isn't the real spring wheat dynamite that Canada is, but Canada got even dinged up probably a little stronger than our U.S. spring wheat. And I think one of the features that's going on here is just the quality of the European wheat. They usually have, the number one quality wheat of Europe is probably 45-50% of their crop. And it was only about 25 or 30% this year. So an interesting world. We always think this wheat's wheat, but there's all kinds of wheat and there's all kinds of needs for it. And a lot of times, the world of wheat for flour is a blend of two or three different kinds of wheat. And that, the basics, soft red wheat is a pasta wheat. Or excuse me, I'll take that back. It's a new, it's a cracker wheat. I'll get this straight and right. Soft red is cracker. Hard red in the U.S. is the bread wheat, and then also along with spring wheat, of course, then just Durham is your pasta wheat, and then the Pacific Northwest in the U.S. is the one that the Chinese like for their noodles. So you can see that all these different things kind of come together here, and I think that's the interesting thing was that we took out and closed above $10 in the spring wheat prices here in the U.S. And that's really as a signal that we still have some more upside over the next month or so as we go into the closing down of some of the U.S. export facilities here as the winter gets cold.
And are you seeing a new limit, a limit that could go a lot higher than the recent price limits?
Well, that's a feature that comes into this thing. If you get something to go with it, you can expand your limits. We had some of that happening at times last spring when the Chinese were involved in various markets at the time. But at this point, the the spring wheat number is just in general here, and the Canadians are really the major supplier of that type of wheat around the world. And there's still indications that maybe some of their crop sizes could be shifted a little bit lower over the next. I think there's going to be a report out before the USDA report here in November, which is about 3 weeks away.
Yes, and corn at this point is lagging behind some commodities. What's the impact of ethanol sales in your view?
Well, yeah, the ethanol side of this thing is really has been a strong driver in this thing. It's been a real twist here. Uh, Previously, I kind of poo-pooed some of the energy prices, maybe being about $80 here, they were going to slow down and things like that. But the ratios and the profitability for margins on this thing right now, with the strong crude oil prices and that, and to some extent, this the whole general area, the natural gas side of the things here, which at this point we're going into the wintertime, and a lot of the U.S. has a natural gas uh, usage in that. Interestingly enough, natural gas is kind of a byproduct of oil and oil drilling, and with that sector kind of lackluster here for over a year, and that things didn't get built up, and we kind of used up some of the storage of natural gas that's out there, and ended up because the heat in the Southwest and the Western U.S. was extremely strong this year, as we all know. And so all of a sudden, we look around and there's not much in the storage, and we're not really expanding our drilling operations fast enough. All of a sudden, and then you throw in probably the most important thing to agriculture is the fact that natural gas is a major component of how to produce anhydrous ammonia, which is a very intense nitrogen that the farmers put into their fields here in the U.S. for corn. And so I wouldn't say that the U.S. corn, the U.S. demand for anhydrous ammonia is as strong right now as it will be in the spring, but there is in some places people like to put it on if the temperatures are been cold enough. And unfortunately, that hasn't been the case this year. We just finally have started to get back to normal, or even a little bit below normal in temps here in the last week or so. But most of the time, you really don't want to put your anhydrous ammonia on in this time of year, if it's 80 degrees, because it won't stay in the ground. It needs to have that colder temperatures to keep it there. And so that's one of the twists here, but that's just another feature in this whole thing here. And I think the real twist on corn right now is that we have a big demand for corn from China twice here, and we are ahead of normal on the seasonal pace here, if you want to say, on corn exports. But I think it's going to be really interesting is in the fact that I think that the corn demand is going to start picking back up again. We had a lot of competition here earlier this year as we went into harvest on wheat, and a lot of people switched over to wheat because it was a little higher protein and it was cheaper. Now all of a sudden wheat is not in the mix anymore, and I think that's going to be a feature here. So feed demand is going to pick up, and also ethanol. We just this last week's total, by the way, on ethanol went to, well, it was in just a few million gallons, or excuse me, thousands of gallons from hitting the highs we've had back in 2017. So we're at one point, just for quick figure, 1.1 million gallons of output was what we had on last week's update, and that was shot up dramatically, nearly 200,000 barrels on an average basis here in the last say month or 6 weeks. And so that's really put things in interesting. So why is that all going on? Because the margins are there. The price of ethanol plus the price of gasoline, there was good money in processing. Now as we get another month or 6 weeks in here, things will slow down with gasoline demand and all that kind of stuff. But it's a good sign that in general, with the demand and prices of energy and going on here, that it's going to permeate lots of different things in the U.S. And so the infamous inflation term has really jumped into the foray here. in the last 4 to 6 months. And it's twisty. It's an interesting twist. Everybody thinks that there's a magic elixir sometimes for getting inflation down, but in the short term here, I guess we're still going to have issues with that, just because we're trying to make this transition back from a pandemic economy back to a normal one, and that sometimes has fits and starts.
Yeah, and based on the fact that you have been traveling to Western Illinois, how are you seeing the harvest in the US?
Well, I was anticipating to see a little bit more because Northern Illinois had a little slower planting period and things of that nature. And also, they had some wind damage issues, and that I didn't really go back through the area that had the worst of wind that happened here. Uh, Interestingly enough, though, the soybean harvest in the northern part of Illinois, I'd say that that's pretty well wound down at this point. And I was going out to my wife's uncle's farm sale, and that it was quite interesting to see some of the values of things that picked up, because the issues that are happening now in the U.S. is that a lot of parts that are not there. People are needing to look at alternatives, looking at maybe some uh, certain equipment that they need. Maybe is this a parts vehicle and things like that, and then that type of thing. But on the corn side, there's still some corn out there. I'd say though it's moved up. I'm kind of anticipating that we'll be 75 percent done on beans nationwide this week, and excuse me. Yeah, 75% done on beans, and probably 65 to 66% done on corn. And those are really kind of the classic levels for the post-harvest rally to stay pretty strong here. And the twist of it all is we're having some pretty significant rains here in the Midwest, in the U.S., and so there's indications that there won't be a lot of harvest pressure in the next 2 to probably 4 or 5 days here. After the big push that we had last week when the skies were clear, I'm not going to likely have that this coming week in the U.S. So that just adds a little more nervousness to people that are looking to buy things here as the harvest is winding down.
And anything else that you are looking to next week?
Well, next week is an interesting one. We'll be starting to get more and more feels as to what people think about the November crop report here in the U.S. And by the way, that's the last kind of real one we get on the U.S. Corn and soybeans and sorghum type crops until we get to the January. And there's not a real update on the December U.S. row crops except for cotton and that, which isn't really in our bailiwick. So that'll be starting to be in focus from there. But maybe we'll also get a better understanding of how the world's looking at utilizing the U.S. harvest at this point. I think we're going to start to see a lot more export activity and tenders and things like that going on here as people want to secure some supplies. And I know that we've had a lot of controversy and issues about supply chain problems in the U.S. on the import side of lots of the container ships not being able to get unloaded very quickly. There's not enough truckers to take the containers away from the ports and get them to the places they need to be done. Surprisingly, the system that's going on in our export situation for agriculture seems to be working pretty fine, and that's good. We haven't had the issues of the boats are there, and we can get this stuff down the railroad tracks or down the barges to the Gulf of Mexico. So I think that U.S. exports have not really been impacted, other than the Hurricane Ida back here in really the month of September that slowed us down. Hopefully that we don't have those more issues, and we see a good push of shipments overseas before we have the U.S. barge system, the river systems start to close down there in the first half of December. in the U.S.
All right. We'll watch that. Thank you, Jerry.
You bet. Always good to talk, Luis, and we'll look forward to seeing how this market wants to react here. I kind of feel like there's kind of a base here, and we'll have to see how what events kind of spark it.